Lights, camera, action.
I see you looking at my PIC. I know. 그게 땡겨 좀 더 땡겨봐봐 기동 차지. Zoom in, zoom out, okay. Zoom in, zoom out, okay. Zoom in, zoom out, okay. Baby 확하게 확대 확실하게.
So, for the introduction, Qatar Islamic Bank are among of the world's largest Islamic financial institution. Qatar is the number 5 in Islamic financial market. The financial and banking industry in Qatar has demonstrated their license and adaptability by surviving the negative effect of the unfair blockade. The Islamic financial sector in Qatar achieve the favorable result that exceed the expectation, reinforcing the confidence of the local and international investor in Qatar's financial and banking system. The QCB and the QFC regulatory authority create the industry standard, but only QFCRA regulate the QFC enterprise. It has been producing in Islamic finance rule book since 2005. The QFCRA joined the Islamic Financial Service Board in September 2019. QFC 2011 rule banned the banks from offering the traditional and Islamic service, but the standardization is still encouraged. In Qatar, the majority of IFS banks are Sharia compliant. The merger of Barwa Bank and the International Bank of Qatar is noteworthy development.
Objective of report. In order for us to complete this report, we have devised several goals for ourselves that we intend to achieve after we have completed this report. First, the report concludes that Qatar has established an Islamic financial system as well as Islamic banking and finance institutions, the development of an Islamic capital market in Qatar, and the evolution of an Islamic financial system. In addition to this, the report details the progression of Qatar's Islamic financial system as well as Islamic banking and finance institutions over time. In order to arrive at this conclusion, it is necessary to know both the total number of Islamic banking and finance institutions in Qatar as well as the number of conventional financial institutions. In addition, the report acknowledged the total fund size and the annual growth rate of an Islamic banking and finance institution. Also includes keeping an eye out for other pertinent issues that explain the development of Islamic banking and finance institution in Qatar and giving out our point of view on the progression and future prospect of Qatar's Islamic banking and finance institution. History of Islamic financial system and Islamic banking and financial development in Qatar. Qatar's government bank and the monetary authority over the country's banking and financial system. It is in charge of developing and executing policies that are directly associated with economic stability and the avoidance of financial imbalance. As the Qatar economy has grown rapidly in recent decades, thanks to government policies based on the free market idea, the country has established an incredibly efficient, resilient and secure banking and financial infrastructure to safeguard its interests. Despite rapid growth, the Qatar banking sector remains modest in comparison to other nations in terms of market value. Qatar is regarded as one of the first countries to enter the Islamic banking market. Qatar's Islamic finance sector is one of the most efficient financial industries on a local and worldwide scale. This industry is one of the fastest growing in the state of Qatar, with the assets of Islamic banking accounting for 26% of overall banking assets in the state. The Islamic banks in Qatar are among the largest Islamic banks in the world. Furthermore, the state of Qatar is regarded as the fifth largest Islamic finance market with 96 billion US dollar in Islamic banking assets and a growth rate of more than 10%.
According to the website of Ministry of Foreign Affairs of Qatar, there are now 20 commercial banks operating in Qatar. The banking sectors consist of 12 national banks, which 4 of them are Islamic banks and 8 foreign banks. They operate through 223 local branches, which all of them are overseen and controlled by the Qatar Central Bank. These Islamic banks account for more than a quarter of the market share of Qatar's banking sector and are among the largest Islamic banks in the world. Islamic banking services are now available to Muslims and non-Muslims in Qatar thanks to the Sharia-compliant banks. Fund size is the total market value of the assets managed by mutual fund. Assets under the management of fund size are the overall value of the capital held by the mutual fund in the current market. On 2017, the assets of Islamic banks in Qatar amounted to 352.5 billion Qatari riyals compared to 322.9 billion Qatari riyals in 2016. It is equivalent to 58.2% of Qatar's nominal GDP for 2017. Over the past 5 years, the assets of Islamic banks grew at a compound annual rate of 10.5%. This is the analysis of Islamic banks indices listed in Qatar market.
Now, I will continue with the issue related to development of IVF in Qatar. Due to the economic effect of the COVID-19 crisis and the sharp decline in oil prices worldwide, the performance of Arab financial market, including Qatar, declined significantly in the first quarter of 2020 compared to the same period in 2019. As a result, closing prices on all GCC financial market fell. In 2020, the GCC financial markets were impacted by the COVID-19 crisis, the closing procedures to limit the spread of the epidemic, and the changes caused by the increased weight of listed company shares. In addition, the COVID-19 crisis precipitated a significantly decline in the price in oil in GCC stock exchanges since 2014. Additionally, the COVID-19 crisis decreased the demand for the company and bank stocks. Since 2017, Qatar has been subject to a political and economic blockade from its GCC neighbors, with the exception of Kuwait and Oman. The volume of the major banks' shares in GCC countries decreased by 25% during the first quarter of 2020. However, indices of GCC stocks increased at the end of 2020 and the beginning of 2020 due to positive factors such as improving business results, an increase in initial public offering, high oil prices, stimulus plan, and economic support. So, this is the table that includes the annual average for GCC stock exchange indices prices during the period 2019, 2020, and Q1, Q2 of 2020. The data show a clear impact of the COVID-19 crisis on the indices during the year 2020. The indices performance is improving in 2021 compared to the performance before the COVID-19 crisis in 2019. Furthermore, Figure 2 shows GCC stock exchange indices sources.
Next, we move to the opinion of Qatar Islamic Banking and Finance Development and Prospect. The market expects Islamic Bank in Qatar to have unique potential to attract Islamic businesses, especially now that regional markets are reopening. CMUQ. John O'Brien, Associate Professor of Accounting and Experimental Economics, and Ford Faruqi, Associate Teaching Professor, reported Q Smart Lab data to Gulf Times. In an interview, they said Qatar is unique in separating Islamic and mainstream banking. This clearly benefits each sub-competitive sector advantages. Islamic banks are likely to develop faster than regular banks, according to market implied prediction. Based on the expansion possibilities of specialized Islamic banks and their efforts to attract foreign businesses to Qatar, the venture capital industry may be at the center of Islamic finance. Analysts believe musyarakah and mudarabah can boost Qatar's startup industry, which is growing. Long-term Islamic bank financing is positively connected with Qatar economic growth, according to empirical evidence. This proves a well-functioning financial system promotes economic growth. Moreover, the data show that Islamic bank funding has helped boost investment and attract FDI. The Granger causality test shows a positive long-term association between economic growth and Islamic banking financing, indicating that Islamic banking promotes FDI. According to KLC Qatar Islamic Finance Hub report 2019, the IFS industry assets expanded by 8% annually between 2015 and 2019, reaching 129 billion or 33% of Qatar total financial sector asset. Islamic banking contributed 107 billion or 82% of the sector's value. Takaful and non-banking financial institutions each contribute 1 billion, while Sharia compliant capital market asset total 20 billion in Sukuk, Islamic bonds, and 399 million in asset under management. By looking at the figures, we can see that Qatar has a bright future in IVF development and country possibilities, which is ideal for attracting investment. In conclusion, Qatar economies remain competitive and healthy despite its problems. Qatar, known for its cash reserve, hasn't been as affected by low oil prices as other oil exporting countries. Qatar has the world's highest per capita GDP. The success of Qatari banks and the Qatar Investment Authority (QIA), Qatar sovereign wealth fund that invests in oil and gas income surpluses to diversify revenues and minimize dependency on energy prices, should be considered. Thanks to its diversification of income streams and good sovereign credit rating, the QIA is helping to secure Qatar's long-term economic survival. In addition, Qatar National Vision 2030 aims to diversify its economy by investing in transportation, education, sport, healthcare, telecommunication, and hospitality infrastructure. Healthy economic growth despite decreased oil prices shows that diversification is working. The stock-taking of COVID-19's impact on Qatar concludes that the government's swift response with complete collaboration from all sectors of the economy, including the Islamic banking industry, was successful, allowing the government to announce the progressive easing of pandemic-related restrictions. Ahmad Medical Corporation 2020. Policymakers should look at the Sharia goals of preserving life and wealth by analysing the necessity and responding appropriately. To avoid a global economic slump and secure Qatar's economy for future generations, direction should be fair in identifying priorities and creating long-term planning. That's all.